On today's episode, we are going to take a look at MELI Mercadolibre. They just reported earnings and the stock is down over 2%. Is it time to buy the dip or time to hold off and wait for more of a correction? If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream taking a look at stocks you want me to look at. So let's get started. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done some crazy returns. If growing your money is something you'd like to do more of this year, you can visit thefool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now back to today's episode. So Mercadolibre is traded under the NASDAQ as ticker MELI, M-E-L-I. Right now, after hours, the stock is sitting at about $1,673, down about 2.3%. Year to date, the stock is pretty much flatlined, up less than 1%, but from its all-time highs, the stock is down about 15-16%. So it definitely has seen some pullback. Market cap right now sitting at about $83 billion. They just reported their fourth quarter 2020 results, and I do believe they were pretty impressive. Mercadolibre is in 3 main countries right now in Latin America: Argentina, Brazil, and Mexico. All are seeing huge growth. Brazil saw 68% growth in revenue, Argentina 144%, and Mexico 141% when we take a look at United States revenue year-to-year growth rate. That is insane. 2 of the 3 main countries are hitting growth over triple digits. They make their revenue in 2 main markets. First is the e-commerce market, and that is broken down between their marketplace and their logistics. This is up about 124.2% compared to same time last year. The second market they're hitting is the fintech market, and here they have their payments and their credits. They have their digital wallets, their online payments, their point of sale as a service, and their general performance. This fintech is still growing at dramatic levels as well and saw about a 59.5% year-over-year growth. Unfortunately, the company is not profitable right now. They had about $44 million in losses before taxes, but this is better compared to same time last year where they had about $63 million in losses. If we take a look at their cash flow statement real quick, they are positive in cash flow from operations. And if we take a look at their balance sheet, it is pretty strong. They have about $1.8 billion in cash and about $1.2 billion in short-term investments, so close to $3 billion. If we take a look at loans, they have short-term loans of about $500 million and about $860 million in long-term, so close to about $1.4 billion in debt, and they have about $3 billion in cash, and positive in cash flow from operations. So their balance sheet is pretty strong. Some great business highlights they saw this quarter was: 1, unique active users grew 71.3% compared to the same time last year, now reaching over 74 million. Their overall gross merchandise volume, which is a great metric to look at how an e-commerce business is doing, has grown 69.6% compared to the same time last year's, and items sold grew 109.5% compared to the same times last year. So we can see the overall e-commerce platform is still growing at crazy levels. We're seeing triple-digit growth across the whole map. Now, if we take a look at their fintech, one of my favorite metrics to look at is total payment volume. This shows how much money is being used with their fintech service, and Mercado Pago grew 83.9% compared to the same time last year. Their overall payment transactions increased 131%. Again, another time we're seeing high double to triple digit growth. They've also said their merchant point of sale products are going back to pre-COVID levels, so things are returning back to normal, and it's seeing about an 87.4% growth compared to the same time last year. All right, so now my overall thoughts on their earnings. I thought earnings were great. We saw an increase in gross market value. We saw an increase in gross payment volume. So more people are using their e-commerce platform. More people are using their fintech payment platform as well. We're also seeing an increase of active users, triple digit growth in some of their countries that they're in, and in the revenue as well. They also have a very strong balance sheet right now. They have plenty of cash compared to debt, and they are also positive in cash flow from operations. So the only reason I can think of this stock pullback right now is because investors were expecting more based on its current valuation. So now they pulled back a bit. Again, 2.5% is not that big of a drop, but Mercadolibre is still a company I'm happy to have in my portfolio. So let me know, what are your thoughts on Meli? Are you buying? Are you selling? At the moment, right now, I personally am not gonna increase my position in Meli, not for any bearish reasons. I do believe there might be other opportunities in the market for me right now. So take care, guys. Have a good night and see you next time.